Hey, it's Alex Glassy, and I'm just back from holidays. You can see from my tan, and wanted to talk to you about a couple things today as I'm getting back into the groove. But first of all, I just want to let you know I had an awesome holiday. Was out in a boat for 10 days in the Gulf Islands, west coast of Canada, and it was spectacular. This is here's a picture that I took from the back of the boat, and the colors and the scenery is awesome. If you're ever out this way, you just let me know ahead of time, and I'd love to get you out there. But we're not here to talk about my vacation slides. So what I'm here to talk about is my latest blog, which is on developing an investment mindset, but also it's an introduction into Business Pro TV, which is starting off on September 19th. I'm really excited about this. I'm basically taking 3 or 4 courses, putting them all together. And normally I would be charging $2,000 for the collection of courses, but we're going to give it all away as part of, as a part of something that's super cool, which we'll talk about later. But today I wanted to talk about this blog post, how to develop an investment mindset, which is for business owners is a fundamental shift of how we look at our businesses. So, let's get into it. So the traditional way of looking at our business is like this. Someone gives us an income statement early on and says, you got to look at your financial statements. Here's an income statement. And it's really very simple. Money comes in at the top, and then money goes out, which is all your expenses, and you're left over, if you're lucky, with some profit. This has a bunch of problems with it. First of all, it just doesn't reflect our business in any meaningful way. The second problem is that the money that's coming in is really, it looks like it's out of our control, like it just kind of comes in and appears in our income statement as revenue or sales. And then the only thing that is within our control are all the expenses. And the only way to increase our profit then, if we're looking just at expenses, is to trim our expenses. But for many of us in young businesses, and I mean young, like startups, 1, 2, 3, even 4 years old, you don't have much profit, and you don't want to maximize profit just by cutting expenses. Cutting expenses is a painful way of doing things, right? What we want to do is we want to try looking at things differently, and what we're going to do is we're going to think about looking at our business from an investment mindset, not a trimming expenses mindset, but an investment mindset. So the first thing I want you to do is I want you to treat every expense, so all the stuff that's in here, I want you to think about as investments, money that you spend and you expect to get a healthy return back. Doesn't that make sense? Each expense, as you take a look at it, must either generate sales, or it must be used to deliver your product or service, or it must support one of the things that we just talked about, either support something that generates sales or support something that is used to deliver your product or service. If you're paying money and it doesn't fit into one of those 3 categories, if you're signing a check or whatever, and it doesn't fit in one of those categories, then you really got to look long and hard as to why you're spending that money. Why do you have that expense? So when you take a look at your expenses, then you got 4 kinds of expenses. The first, sales and marketing, are clearly related to increasing sales. And you want to make sure that if you're spending $1 on sales and marketing, you're getting a multiple of dollars back in revenue, right? Otherwise, you got a problem. You got to tune that up. Then you got research and development expenses, and those are monies that you're spending, you're investing over the medium and long term. You're trying to develop new services, new products, or enhancements to existing services and products that your customers will then buy. So you want to look at those expenses really carefully, make sure they're going to turn into something that warrants you making that investment. Cost of goods sold is a special kind of expense, and these are things that you spend when you have a sale to deliver that sale. If you're sold a widget, then you've got a cost of the widget and a cost of the paint to prepare that widget, a cost of your manufacturing process. That's all cost of goods sold, and you want to make sure that those things are as efficient as possible. And then the final kind of investment that you've got are general administrative costs, and these are the ones like rent and bookkeepers and administrative salaries. They're used to support all of the other expenses. You want to make sure that there's a direct correlation between those expenses and what they're supporting, right? So now you understand that we're going to take a look at our expenses and we'll look at them differently. Let's take a look at how we look at them differently. What we're going to do is we're going to take our income statement, we're going to pull it apart, and we're going to put it back together again a little differently. And here's what we end up with. Let's take our expenses, 3 of the 4 different kinds of expenses, and let's start them at the top. And let's consider that these are not just money out, but these are monies that we are going to invest. And those are the general and administrative, research and development, and sales and marketing. And as we spend that money, we then expect that the next thing that happens is that it's going to return more sales, way more sales than the money that I just spent. Does that make sense? And then because I've got a sale now, I have to deliver that deliver that sale or that service. And so I have these cost of goods sold. And so we take a look at that. And when we take our money that is returned, our revenues, and we subtract the cost of goods sold, what we end up with is something called gross profit. And that's the third step I want to leave you with, is that rather than managing our business by profit or by a simple income statement, what I want to do is I want to start managing my income statement by gross profit. Because when I do this, it actually gives me some more control over my business. What I start to realize is that money invested here determines how much sales I have. So I'm actually in control of my sales. Sales aren't just decided upon by my customers to arbitrarily pay me and the money just shows up. But I can create systems whereby I know that if I spend $1 here, I'm going to get $3 back in sales. If I spend $4 in marketing, I'm going to get that much back in sales. Then what I can do is I have control over the cost of goods sold. Those things I want to tune up to make sure that I'm as efficient as possible at delivering my service and my products. Does that make sense? And so therefore, I can start to manage my business using gross profit. Now, what I'm going to do as well is I'm going to even take this and I'm going to pull it apart again. I'm going to recombine it, going to get back to the income statement, and we're going to look at it like this. And this is how we read this. I'll give you a second to take a look at that. Here's how we're going to read it. We're going to take month 1. And we're going to ignore everything except for the 3 primary kinds of investments or expenses: general and administrative, research and development, sales and marketing. I'm going to go, money that I spend this month is going to end up as, or come back to me as a return at some future month. So let's just say it's month 2. It's going to come back here, right? And then when I've got those sales, I'm going to deliver the sales, the products or the services as efficiently as possible. And I'm going to manage and monitor my cost of goods sold. And when I take this minus this, I end up with gross profit. This is a fantastic way of thinking about your business. You can still use your existing income statement, but rather than just taking a look at 1 month and watching the money drop from top to bottom, what I'm going to do is I'm going to take a couple of months and I'm going to take the expenses here and use them to determine whether I'm making appropriate investments of those expenses in subsequent months. Now, many of you will say, or some of you will say, hey, what about profit? I'm so used to looking at profit, and aren't we told to monitor our bottom line? Sure we are, except that we use profit in a couple of very clumsy ways. Profit is either used to take a look at the operational health of our business, but it masks a lot of things. We can be having what looks like good profit, and yet we're actually really not operationally efficient. And that's why when we take a look at it this way, we can see operational profit, we can see operational efficiency much better by taking a look at breaking apart these expenses, separating them, taking cost of goods sold, putting them over here, taking the other ones and putting them over here, because both those expenses are related to 2 different things. One of them is related to revenue generation or sales growth, and the other one is generated to delivering our cost of our services and our sales, right? The second thing that we use profit for is to determine the financial health of our company, right? If we have lots of profit, surely we're going to have lots of cash. But as too many businesses have found, you can have wonderful profit and yet at the end of the month end up with no cash. And a lot of profitable businesses have actually gone out of business because there's not enough cash. And so if you're going to use profit as a proxy for cash, bad thing to do. better to look at cash or look at the cash flow statement, which is the subject of another discussion. Anyway, hope this has been useful. The blog above or below, wherever this video is showing, has this in greater detail. And just to summarize it all, to become a business pro, to become better at managing your business, develop your investment mindset. Treat every expense like an investment. Look at your income statement differently. Track your performance by gross profit, not by profit, and you'll become a better business owner. And then the last thing I'm going to encourage you to do is to take a look at businesspro.tv. Starts on September 19th. It's going to be tons of goodness that are going to make you better at your business, which makes your business be more profitable, higher growth, generating more wealth for you and your family. Go to businesspro.tv, sign up now, and I'll see you on September 19th. Thanks a lot.